Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. When it comes to taxes, high net worth individuals and business owners can become a victim of their own success. For both, at the highest tax rate, the IRS can tax more than 40%. And that problem might even be getting worse as tax laws are set to change in the next few years. So here to help us discuss this possible solutions to these problems is attorney Matt Hochstetler. So Matt, where should we get started?
Thanks, Jim. Well, let's start with the estate tax exemption. This year, in 2022, each individual has $12.06 million in estate tax exemption. And that means a husband and wife have a combined $24.12 million of exemption. Now, unfortunately, at the end of 2025, that exemption is going to get cut in half. So that means about $6 million per person or $12 million per couple going forward.
And there's also a 40% excise tax on all amounts over that exemption. So the problem gets even worse when you consider things like generation skipping taxes or the GST tax, which is an additional 40% tax on amounts passing to grandchildren's and more remote descendants.
Yeah, and so gifting is always an option. So you can gift now to family or to a trust, and that gets the asset out of your estate, and so any growth won't be impacted by estate taxes when you pass away.
Yeah, and you have a lot of latitude in things that you can gift. A lot of people might look at cash and securities, real estate, insurance, trusts, annuities, business interests, and other assets can all be fair game.
Exactly. And it's especially important for business owners because consider a husband or wife who own a business and they have about $5 million of assets and a $20 million business. For every $1 million that business grows, about $400,000 is going to be paid to the IRS in taxes.
Yeah, so if a business owner really wants to avoid that tax, what should they do?
Well, this may seem counterintuitive. They should sell the business. Now, not sell to a third party, but just convert that business, which appreciates, into a promissory note, which doesn't appreciate.
Yeah, and before our business owners really dismiss this idea, this isn't the end of the strategy.
That's right. They can still keep control of the business in certain ways. And we do that by selling the business to a certain kind of trust, or we usually use a SLAT, which is a spousal lifetime access trust. And that's a trust that a husband will create for a wife and a wife will create for a husband.
And so with this agreement, even though the trust benefits the husband and wife business owners, the trust assets don't belong to them, so the IRS doesn't take the 40% when they pass away.
That's right. Now, of course, each strategy, each family situation is unique, so it's really important to consult an attorney and financial advisor to really craft a strategy that's appropriate to the family situation.
Yeah, so these strategies can be right and offer some huge tax savings, but they aren't for everyone. So thanks for joining us today, Matt. Really appreciate it. To help discuss both of these strategies. So if you're interested in learning more, we can have illustrations that can help clarify this complicated process. To talk more to Matt or myself, just give us a call. Stay tuned for Fox News Sunday.